Welcome to This Explainer. Today, we're unpacking a massive financial surge from E2E networks in the first quarter of fiscal year 2027. But more importantly, we're going to dive into the underlying technological shifts that are actually driving it. We're going to look at how a specific hardware catalyst, combined with a pretty bold philosophy on artificial intelligence, is completely transforming the landscape of cloud computing as we know it. Here is our roadmap for today. We'll be looking at 1. Exploding Q1 financial results. 2. The Blackwell B200 catalyst. 3. Defining sovereign AI strategy. 4. Expanding the global market. And 5. Strategic roadmap and future.
Section 1. Exploding Q1 financial results.
Okay, let's jump right into this and start with the numbers that are making everybody do a double take across the industry. Just look at that number. E2E Networks recorded a staggering 334% year-over-year revenue growth in Q1 of fiscal year 2027. I mean, that is the kind of explosive scaling you rarely see in established infrastructure companies. But you know what? The story absolutely does not stop at the top line.
What's truly fascinating here is the profitability. Revenue hit 1,568 million rupees, which is a 64% jump from literally just the previous quarter. But the real jaw-dropper is the EBITDA margin. It skyrocketed to 75.2%. That is a massive 1,450 basis point leap compared to Q4 of FY26. Management attributes this directly to operating leverage. Basically, as their revenue scales up, their costs just aren't scaling at the same rate, which allows a phenomenal 439 million rupees to drop straight down to profit after tax. So what actually sparked this massive financial leap?
Section 2. The Blackwell B200 catalyst.
The immediate catalyst for E2E's massive quarter was the successful commissioning of their new high-performance hardware clusters. Specifically, we're talking about the NVIDIA B200 Blackwell GPUs.
During their earnings call, management was incredibly direct about this, and I really love the transparency here. They said, "We went live with our Blackwells. The 1,024 Blackwells went online and were put on revenue. They took out a loan, funded this massive first lot of GPUs, got them racked up, and boom, instantly monetized them."
Now, the crucial point here is exactly how they're achieving this growth. It was driven primarily by adding all this massive capacity and utilizing it to the absolute max, rather than just gouging their existing customers with price hikes. Management noted their fleet is running at near maximum utilization. And sure, while there were some minor price adjustments because of memory costs on the CPU side, they actually let existing customers lock in older pricing just by signing longer-term contracts. So they're clearly focused on capacity and high-quality relationships, not short-term price squeezing.
Section 3. Defining sovereign AI strategy.
Having the latest hardware is one thing, right? Lots of companies have the cash to buy servers. But what's really incredible here is E2E's true value capture, which lies in their underlying philosophy. They position themselves as a neo-cloud, which essentially means acting as an AI factory. Their core strategy revolves around sovereign AI. This means giving enterprises the infrastructure they need to deploy open-weight models completely within their own boundaries. And since these open-weight models are now incredibly close in performance to the top-tier proprietary ones, this strategy seriously reduces dependency on big tech frontier APIs.
Just think about the stark difference here. When you rent frontier APIs from a traditional hyperscaler, you're pretty vulnerable. Management explicitly called out the risk of someone sitting thousands of miles away deciding to arbitrarily shut down your access because of some political or provider policy shift. Open-weight models hosted on a sovereign neocloud, those offer complete control. You own the deployment, you control the fine-tuning, you manage secure data access, and you decide exactly what the model remembers and forgets. It is engineering that is owned, not rented.
To actually execute this, E2E isn't just handing over raw GPUs and wishing you luck. They've built a sophisticated layered software stack in-house. This includes platforms like TR for training and model endpoints, and Jarvis Labs for developer-friendly GPU clouds. On top of that base, they've implemented an agentic framework. This allows AI models to observe, think, act, and use a harness for state tracking and tool invocation. It basically converts raw brute force computing power into highly reliable, automated workflows for enterprises.
Section 4. Expanding the global market.
So, you might be wondering, why is this sovereign AI approach resonating so strongly right now?
To understand that, we have to zoom out to the macroeconomic level. The tailwinds here are staggering. AI infrastructure is being reclassified globally by governments and enterprises alike from a simple utility into a strategic national asset. We are looking at a $1.5 trillion global sovereign AI infrastructure opportunity just this decade. In India alone, there's an 8.33 gigawatt data center pipeline heavily anchored in Mumbai and Chennai, and the government's India AI mission is pushing for over 38,000 GPUs. Add it all up, and the global neocloud market is projected to hit $180 billion by 2030.
And the actual nature of the work is shifting too. While management noted that AI training currently dominates E2E's volume, the line is getting pretty blurry. Customers are often running training by day and inference at night on the exact same clusters, showing the immense fungibility of this compute. But industry projections show that by 2030, AI inference, which is actually running the models to generate answers, will make up a whopping 80% of neocloud workloads. E2E is positioning its infrastructure to seamlessly handle this huge transition.
Section 5. Strategic Roadmap and Future.
Okay, so how exactly does E2E Networks plan to ride this massive wave into the future? Well, their operating philosophy moving forward is wonderfully simple. Do less and do better. They want to build continuous operating leverage by focusing on high-quality partnerships. A prime example is their two-way commercial setup with L&T. Basically, E2E buys data center capacity from L&T, and L&T buys cloud infrastructure from E2E while they jointly pursue customers together. On top of that, E2E is seeing a major shift toward 2 to 3 year contracts, giving them incredible visibility and predictability for their future revenue streams.
Checking out their immediate roadmap, they're expecting their next batch of B200 Blackwell deliveries in the coming months. But they aren't stopping there. They're already planning their expansion into NVIDIA's next-generation Vera Rubin architecture. And what's really fascinating here is their lifecycle approach. Even as hardware cycles get shorter and shorter, E2E targets a 6-year lifecycle monetization for every GPU generation, finding a price-to-performance sweet spot for those older models. Also, they're aggressively expanding globally, having incorporated a soft cloud subsidiary and establishing a U.S. Delaware entity specifically to manage alliances and sell to international customers.
Now, when analysts asked about the potential of an AI bubble, management firmly dismissed the concern. Their perspective is that we are quite literally at day zero. As they put it, the whole world is building the AI supercycle. The sheer scale of capital expenditure required globally, which is estimated at around $6.7 trillion by 2030, absolutely supports this view that the infrastructure build-out has only just begun.
Which leaves us with this crucial question to wrap up this explainer. As trillions of dollars flow into this space over the next decade, who will ultimately control the future of AI? Will enterprises remain tethered to massive centralized legacy hyperscalers, or will the future belong to purpose-built sovereign neoclouds like E2E Networks, who are handing control, privacy, and governance back to the users? It is a fascinating shift to watch, and honestly, E2E's explosive quarter is pretty solid proof that the market is already casting its vote.